Hello everybody and welcome back to day 2 of Fintech Week London. I'm here today with Philipp and Timo of Swarm. Philipp and Timo, how are you?
All good, thank you.
Fantastic.
Are you enjoying the event so far,
Very
day
much.
2?
Yeah.
Yeah, it's great to see some fresh faces and see everybody in person again. It's really
Very
refreshing.
true.
Before we get on with our interview, why don't you tell our viewers a little bit about who you are and which company you've come from today, please?
Right, Timo. I'm a co-founder of Swarm and have a background in software and financial services. And my role is mostly to look after our financial product portfolio, as well as some of the business development aspects and investor relations.
Fantastic.
And my name is Philipp Pieper. I'm the other co-founder of Swarm. And my background is reverse. Actually, I'm in financial markets and later in software, so serial entrepreneur. And together we actually started this endeavor in 2017.
So Swarm has been described as the world's first BaFin-regulated DeFi platform, providing a high liquidity protocol to financial institutions and retail traders. So would you be able to tell me a little bit about what that actually means in layman's terms?
So we're in a progression of the market in some ways, right? Where I think it's become clear that DeFi as tools and techniques are something extremely innovative to the market, and they not only apply to crypto assets, but will apply to securities in the wider financial market as is. Now, with that comes responsibility of actually how do we make that such that the rest of the ecosystem, including regulators, are comfortable with that. So we saw this in 2020, that was where the market was going. So we actually went down the regulatory rabbit hole to actually become a licensed banking entity in order to then make this as legitimate, as accepted as possible, while preserving the DeFi aspects with self-custody and transparency and everything that comes with it.
Fantastic. And Timo, did you have anything to add to that?
Yeah, I think the integration of what's called TradFi and DeFi and crypto in general is a very clear trend that we're betting on. And so we're just heavily investing and building product into that trend.
Fantastic. Well, we'll be focusing a little bit more on that later. But for my next question for you, so how does the potential of TradeFi differ from DeFi in Web3?
Well, I mean, the potential of TradFi is kind of well known. I mean, it is what it is. It's been, that for many years now. And in terms of the potential for DeFi, we're just beginning to explore what we can do there. So on one hand, the DeFi market has developed in isolation from TradFi by and large so far. And we've seen that you can create really exciting new products, and there's a lot of aspects that are new in terms of composability and direct access for investors to things where they can just control themselves how they want to invest and into what. And so that is now the way we're looking at it, merging with TradFi in order to create this really interesting combination of TradFi assets into DeFi architecture and financial product that are constructed differently, and where the idea is to provide more direct access for investors so that they can pick and choose themselves, they can custody assets themselves instead of going to an institution and handing off their assets and then basically having the TradFi institution to do everything for them.
Fantastic. And Philipp, did you have anything to add to that?
I would say that if you look traditionally at the way that banks are constructed, they're basically monolithic silos that basically have all the different functions as sort of stacks in that silo, and they're exchangeable. They're to a certain extent they're interacting with one another, but not as much as it could be. So what DeFi does, it basically disassembles the value chain and allows that to happen on smart contracts with transparency, that the banking landscape going forward can look a lot more interconnected. And a lot more functions are not really a centralized function, but are operating on smart contracts. And by doing that, the capital efficiency gets better, the access gets better, and actually the composability that Timo describes makes it a very innovative space.
Fantastic. And look, when we're talking about innovation, we see tokenization becoming more and more prevalent within the industry. I mean, everybody's interested in it. Can you tell us a little bit from your perspective what you would describe tokenization to be? And I'm also really interested to know if you have any meaningful examples to mind.
So tokenization as a concept has been around for years, and I think people have always declared the current year to be the year of tokenization, and it never really happened. But the reason was something where it was missing a couple of keystones in that whole equation, namely who can run a liquidity market for tokenized assets, etc. But what it is effectively it turns an an asset, whether that's a public asset or a financial instrument or some other asset, into a digital twin that can then be used as a programmable element in whatever other finance function then DeFi actually provides. So the tokenization aspect is merely a function of actually just bringing it on one programming platform to then actually do other things with it, right? Now, what you can do with that, I think there's a lot of things that you typically would compare to traditional financial markets. So it's sort of comparable to how the New York Times, when they started to enter the internet, was basically putting their paper on PDF. And of course, when you look at the New York Times today, it's a completely different experience with a lot of social elements and other data and advertising opportunities that come with it. And we're going to enter that very same kind of progression in this space of actually doing tokenization, where it's at the beginning, people are trying to compare it against what is happening today in just the securitization aspect or the trading aspect of what current traditional markets do. But there's going to be this whole element that is not visible today, that by applying composability and programmability, suddenly you can have a lot of other effects than purely just the securities and the efficiency aspect of it.
That's a really interesting definition. Would that be a definition that you would agree with, Timo?
Yeah, and I think it's really hard to predict like where that's going to take things, because once you digitize and it's really more like an enabling function. So tokenization is really an enabling layer, which basically says, here's the digitized version of whatever you had over here. And it could be a digital piece of information or intellectual property or asset, or it could be a physical asset. But regardless of what it is, it's basically once it's brought online and it's being digitized and it's on chain, that's when the creative kind of process can start. And then you can start using that asset across like whatever is possible already on, let's say, DeFi or blockchain in general, or even to just build new services around that particular assets, whether it's music or whether it's an NFT representing, a piece of art or whatever that is.
That's a really, really good response from both of you, and I think what you've really helped to emphasize in your answers is how wide-reaching tokenization is. It could apply to many different aspects of anything, really. In terms of the specific benefits that it's going to bring to the consumer, but also to institutions that engage in it, how would you describe those benefits?
The way I look at blockchain in terms of, let's say, for an individual, a lot of it has to do with transparency and control and self-custody. So basically, instead of handing off an asset to somebody else and not really knowing what's going to happen to that asset, I kind of like the idea of being able to hold on to the control of that asset and also being able to apply that asset to various kind of services and products to generate yield or whatever I want to do with it. So that's a very concrete benefit that I see with using digital assets. And the other piece is like the transparency that blockchain provides, so that if some transactions are happening, I'm able to basically either verify them, or I can just kind of use that information as to build trust with whoever I'm dealing with as a counterparty. So, I mean, on an individual level, it's quite a fundamental change to be in control of your own assets instead of just kind of trusting institutions. So that's maybe the biggest thing that I see.
So I would agree and add to that, basically, and then the fund starts to compare it to actually how the economics of today's traditional financial markets actually work. So if you look at, for example, UCITS funds that basically give you a basket of securities and manage that on a sort of balanced basis, they take 2% out of the equation. And that can be a smart contract that eliminates that 2% entirely, or maybe down to like 50 basis points. So it's a real economic factor if you get that right. If you have a real estate transaction in Germany that costs on average 12% transaction fee, if you can reduce it to 6%, that's a huge economic benefit that comes from actually applying technology with all the benefits of actually self-custody, but and then suddenly things can happen thereof. So then there's the undefined space of actually what other things you can do that today can't be tangibly quantified. So for example, because I'm holding a certain stock of a company, maybe I get customer benefits from that. So the crossover of actually holding a security with other things, which are customer-based things, customer relationship-based things, so far it can't be done because it's a siloed financial market and it's a siloed customer engagement, right? And so those things will be very exciting to watch, but the compelling reason will be the sort of control issues, solving them, paired with the economic benefits of actually doing it.
You're absolutely right. I mean, you mentioned that tokenization, or the idea of tokenization, had been around for over a decade now, and we are inching closer to widespread adoption. We are. The industry is moving in that direction. But in terms of the regulation, how will the regulation need to behave? And what regulations will need to come into place to ensure to facilitate that widespread adoption?
Let me touch on what you said before, because I think it's a crucial piece that actually, just aside from regulation, which I'll talk about in a second, actually the tooling obviously was very, very key to get that right, meaning that there's enough consumers at this point in time, both institutional and retail, that actually know how to operate a wallet or operate a smart contract, who have made choices on custody. So I think we've progressed nicely to a wider group of people that actually know how to operate these things and what the concept of a blockchain actually is. So actually the Cambrian moment is actually now paired up with actually the progression that has happened on the regulatory side, which for a long time was undefined and really challenging, right? So what does a smart contract based, digital ledger based equity actually mean? Who owns ownership and custody? What are the tax responsibilities and so forth? So it took a long time for it took a long time for jurisdictions to actually make sense of it, and then put language in place, regulatory language in place to define it holistically. And obviously small nation states were early, but then actually and we started actually operating from the United States and saw some really big complications with the way that sort of the different agencies were trying to resolve that. And then suddenly Germany came along. For us it was a big moment, because suddenly one of the big industrial nations was putting a stake in the ground saying, this is important to us, and that's why we're elevating it to become a financial instrument with everything that goes with it, right? So I think as intense that has been to get through the regulatory process, the effect is quite significant, because number one, we as actors are elevated to be proper financial institutions on par with other financial institutions. But secondly, consumers get the trust that so far was missing in all of the other elements in the space. And it becomes even more important when it comes to sort of bridging to traditional finance, where someone still at the end is actually holding custody over some value and some asset. And so the trust element in this respect is far greater than actually if you just have a smart contract or just a wallet-based holding of crypto assets.
That's a fantastic answer. And Timo, did you have anything to add to the regulatory space that will have to facilitate the adoption of tokenization?
Yeah, there's been a lot of very recent examples of where regulation might have helped in where companies were acting not in the best interest of their clients or customers. And so, for example, if you're taking excessive risk one way or another, and that's not being, let's say, disclosed or audited by someone, and it's not well understood by the people that are using the various platforms, then regulation can play a role there by basically saying, well, at least you need to adhere to the following framework in terms of your risk exposure, and it's actually being kind of audited and controlled that those covenants, or whatever you want to call them, are being met. So I think regulation plays a really important role in terms of building trust, and innovation is great and you can move fast and break things. That's kind of how new things happen. But also, because we're dealing with, to a large extent, financial assets, the regulation has a natural role to play in that. And we've seen that, when regulation is not there, then certain things can develop in a, obviously less functional or less desirable direction, to say the least. And then, so we think that regulation has a long-term benefit for the whole space, not only from the integration of crypto and TradFi, but also just within crypto itself. To make it better in some ways, as long as regulation gets implemented in a good way, so to speak, so that you don't kill off all the benefits of actually using blockchain in the first place, then we think it's a good thing.
Well, that's been a fascinating conversation. Thank you so much for joining us today. That's Philipp and Timo from Swarm. Thank you very much, and enjoy day 2 of Fintech Week London.
Thanks for having us.
Thank
Thanks
you.
for having us. Fantastic.